Morning, everybody. What's going on? How's everybody doing? JT, what's going on? Sick. It's good to see everybody. Hey, Brian, how you doing? Good. Well, let's hopefully everybody's having a little fun. Yeah, I wanted to chat with you guys for a little bit because, obviously we do our Tuesday and Thursday YouTube lives, but they're like 20 minutes, so we can only get so much stuff done. And, when you're doing it right before the market starts, obviously I've got to leave and go to my chat room and start, getting ready to shred. So we don't get to really answer as many questions as we normally would. And obviously that leaves some people, with some answers that need to be had. So what I want to do today is just, what we're going to go over is, the state of the market, some of the setups and types of stocks that are working in this current market, like some things you can do to catch some of these bigger movers. And then, we'll go into just some of the different things that I'm looking at for the next week. And then, of course, I'll make sure to come in and answer your questions and all that fun stuff. Mr. Rick, how you doing? Andrew, how you doing? Reef, what's up? Jazz, welcome. Jay, how you doing? Anupa, what's going on? So a couple things, let's first talk about like what we want to be doing on, weekends. So a big part of trading is not just showing up with a watch list and going to town, right? You want to be really preparing for the market. And so there's a handful of things that you have to be doing pretty much on every single weekend, and I'll kind of go in through a little bit of my routine and then we'll go in from there. So Abhishek, what's going on? Hey, Abhishek, call me later today. Maybe like 1 or 2 o'clock. I'll be around. You're the 519 area code, right? Cool. So first thing that you always want to do before you even get into like the nitty gritty of the stock market is go through the market indices and figure out really what's working in this market. I think that's one of the most important things that you can do is figure out what's working in the market. Like where are the indices? Are we in an uptrend, downtrend? Are we consolidating? And then from there, you can start to build out your trading plans and go from there. So like the first thing that I always do every single weekend when I'm starting to do my own personal homework is go through the market index list and kind of see like what are the different indices that are moving. So the first thing I always want to do, and so this program, for those of you guys that are new, I use TC2000, which is like a software that helps you with your scanning and stuff like that. I don't trade there. It's just a charting platform. A lot of my students use it for also doing their paper trading or simulations. I traded a bunch of other different brokers and so on and so forth. But I think this is probably the best software for bang for the buck, in terms of like, you can get all the features you need for like $50 a month. And it can be like your centerpiece of your workflow. And so what I mean by workflow is, as a trader, you need a handful of things. Number one, you have to have an ability to organize lists. Then you also have to have the ability to find certain stocks that fit your criteria. And then, of course, most importantly, you need a hub where, you can put in notes, you can track the markets, you can set alerts for different stocks, and you can be able to find what you need. So what I use is this TC2000, and there's a lot of other charting platforms out there. There's no such thing as a bad one or anything like that. But what I typically, I need an all-in-one platform where I'm not like depending on a million different scanners and different stuff that is really expensive. I just want something that I can customize, and then that has like good colors. As you can see, I got like Coke bottle glasses, so I need like really bright colors. You'll see like anytime you see any of like my different layouts and stuff, right? I've got always like a different color scheme on it. So I use this TC2000. You guys can have my layouts and stuff if you want. That's totally cool. So let's go into like first thing that we want to do. Let's take a look into the market indexes and see where the heat is in a particular name. So I have an index list here. There's 29 names here. I'll make sure to send this to you guys right now. So in this index list, like what I want to do every single Sunday, I want to run like a 5-day sort. So what a 5-day sort is I'm going through the different indexes to see like where the heat was in the particular market. In any type of market, whether you have a flat market, down market, there's something that's cooking in the market. So you need to know like what type of stocks are working in this market. For example, you may get an idea and you say like, wow, like this oil stock looks good. But if the rest of the oil sector stinks, there's a good shot that oil stock that you're watching is going to be a dud. And you can do the same with solars and so on and so forth. So here's a list of the indexes. You can just kind of download that right into your platform, and I'll send you the basic list of all this too. Hold on here. Good. So I'm running a 5-day sort. Why do I want to run a 5-day sort? You want to run a 5-day sort for a particular reason. You want to see what was hot and what moved the most in the last 5 days, so you can get an idea of sector strength. So like you can see here, so this is like, and these are just ETFs that track certain sectors. So this UNG was up 25% last week. What is UNG? That's the natural gas ETF. 25% is a big move. And you can see with UNG, this is something that's been in a big downtrend from 40 to 10. Monster downtrend. Now what you're starting to finally see here is like a rebounding effect. And so what that's telling you is that maybe some natural gas type of stocks would be in play. So if you're thinking like, okay, this natural gas is up 25%, the chart looks good. Now how do I find a natural gas stock, right, that fits like what I'm trying to do? There's a handful of things that you can always do when you do this. So like if you're on your TC2000 or any platform, what you can always type in, like on your TC, you can go into natural gas and just type in natural gas, and then what you'll see is like all these different sectors in here. So like what you can do is like click them, and then you'll see what is inside that particular industry. So you can always go in and find that you can do oil and gas and oil and drilling. So you can start to see like you've got all these kind of oil and gas stocks in here. And so then what I'll do is I'll start sifting through them to find trading ideas. It's what we call like a top-down approach. Same type of deal. So you got TAN here. Does anybody know what TAN is? TAN is the ETF for solar. So what you can see here is, this is like a monster trend. So it's up 16% last week. You can see here like you've come out of a nice flag pattern and you've got yourself like a really, really big trend on it. So like if I want to start looking for like particular solar names, I could go in and click like you click this component list here on TC2000, and you'll start to see like all the different sectors that make up a particular name. So if you're looking and saying like, okay, I want to build out a solar list because this sector has been hot. And one thing you're starting to see even with this particular sector is that it doesn't look like it's slowing down. So like for the next week, I really want to have some potential solar stocks on my watch list for potential day trades. And of course, if you're doing longer term trades, you want to make those type of things too. I like to make two lists, one for day trades, one for swing trades. A swing trade is when you're holding something for 2 to 14 days, and a day trade is something that you're holding for, right, less than a day. So a lot of my day trades could be like 30 minutes or an hour or 2 hours. So, okay, solar sector is looking good. So mark this down, flag this. So what will happen is as we go through the sectors that look good, we'll flag a few and then we'll look for individual stocks within them. There's a lot of hot ones in both of these. Silver. Silver has been on a monster run for this whole, really since the coronavirus kind of bottomed out. It's been on a monster run. With the Federal Reserve printing money, right? And there's all this stimulus going on, and we do things that kind of debase our currency. What people are doing is going into hard assets. That's your silver, that's your gold. They're even getting into Bitcoin. Have you guys seen the run in Bitcoin lately, or different cryptocurrency stocks? I trade a lot of cryptocurrency, and every single one has gone up in cryptocurrency 50%, 100% in the last few months. It's been like throwing darts. So you're starting to see people file into other types of currency so that they can get this thing going. So silver is probably something we need to keep an eye on. It doesn't look like it's ready for a buy point yet, as it's gotten really extended and now it's starting to pull back. But like overall, like that's, you know, a good look. If you see even gold, like gold, if you look at like a long-term chart of gold. So let me go back here. We'll bring up a chart of gold for the last, since 2005. Okay, so this is 15 years. So what you see is that from 2005 to 2011, gold made a run to about 186. So that in gold ounces, that's like 1860. We finally taken out this resistance spot. So we're at an all-time high. A big tenet of trend trading in general is that stocks or currencies or commodities, when things break out to all-time highs, when things, Ernie, that's a nice goal, by the way. When things break out to all-time highs, what we want to be doing is keeping an eye on them, because they have the opportunity to keep going. Anything that breaks out to all-time highs, what that's saying is that, number one, besides it just being at highs, is that there's no level of supply overhead. So a big part of trading is understanding supply and demand levels. When you break out to all-time highs, there's no level of supply that's all overhead. So this is something that's really important. So this gold is going to be something that is going to be in play for a very, very long time. And you can see like you've been on a monster run. So we had a flag pattern here, and we finally just ripped over and popped like, 10 points. Now what we're starting to do here is like kind of come back. What we call this is like a retest or a throwback. So when you get a breakout of a level, oftentimes after the breakout, there'll be a throwback or a retest of that level. When that happens and it holds, that confirms the new trend. So what I mean by that is that if this, which was this level here, was the all-time high, it went up to 195. Now, if you come back and kind of retest around this area and it holds, that's confirming that this breakout is for real, and we want to be buyers of it. So what you want to really be doing in this coming week is, if this gold comes back here and retests, you want to be looking at either the gold, gold as the commodity, or you want to be looking at gold stocks. So how would you find gold stocks? So if you think about like any sector, you can come in here. If you look here, there's a whole list of gold particular names. So like I just pulled up in T2000, 42 gold stocks, okay? And so now like you got a list of 42 of them. So what I want to do personally is I'm going to flip through all of them, but I'll sort them by 90-day momentum. I want to sort them by 90-day momentum. So I want to see like what are the gold stocks that are up the most in the last 90 days. That's going to give me an idea of the overall trend on some of these names. And then from there, like I'm just going to start flipping through them, looking for like particular patterns and things of that nature. So that's the easiest way to kind of go through, some of these names. And you'll see some of these stocks like this WPM. There's a lot of good looking kind of gold stocks that have been pulling back to support. If you start to see some of these things hold, like that's a pretty good one right there. Like this AEM's been on a big trend from really 55 to 85. If you start to see this thing pull back, like those are going to be probably some good opportunities. If you need smaller ones, like, you don't want to trade larger, stuff, there's a whole host of these small cap gold stocks also that are starting to set up for potential runs. So that's how you really want to go, like with the particular sector. Start with the overall, and then bring out a list of, the smaller ones and see what's inside, and then you'll be able to see like which one has the opportunity to go. So like you can see like this DRD, this is a nice looking stock. This thing got from 18 all the way back down to 14. Now it's on a big level of support here. And in general, like if you're doing longer term trades or anything like that, when you get like 3-4 day pullbacks into like a support level, you typically will get a nice bounce. So like you got like, see how like you came down to 17, you pulled back for 4 or 5 days here, come back into support, and you get this bounce. Now you came back from 18, you pull back into the 14 spot, you got a bounce. And now you're coming back into this level, you got your 50 SMA under it. Like this ends up being like a really nice kind of potential low risk trade where you could take a position in this once gold starts to bounce. you put a stop loss under your 50 SMA. What a stop loss is when you put an order in that says like, hey, if it goes under here, right, you have the computer, the broker sell you out. That kind of protects you against, what we'd call the pull and pray. The pull and pray is when you buy a stock, it starts going down and you just hold it. You just hold it and you pray that it starts to go back up. When I was a new trader, I used to do that all the time. I'd make some good trades and then I'd get stuck in one and then I would just pray like, oh, please give me my money back, And if I get my money back, I'm going to get out. And then it would just keep tanking. And next thing you know, like all your hard work for the last 2, 3, 4 months, even longer, has been negated because you just didn't use a way to manage your risk. In general, if I'm in a stock and it starts to go against me and it starts to break levels of support, I'll just dump it and I'll get back in. And the reason I'll do that is because your biggest trade, your best win, your biggest day is always right around the corner. It's always right around the corner. But the key is you got to stay in the game. You got to have the capital fresh. Your mind has to be fresh. When you don't have that because you're stuck in a stock and you're waiting for it to go back up, then you miss out on that epic opportunity that's always around the corner. And in this market, in the last 10 years, give or take, every day there's always something that's cooking and booking, And so you don't want to be, you don't want to be stuck in these kind of names. So there's a whole host of these kind of names that are starting to look good. I'll send you this list over here. You can kind of input this in and go through them. Go through them. This is a whole gold stock list. Go through these things. When you put them in your trap, put them in your platform and do your homework. That's the one thing is if you're trading or you're investing, you're swing trading, you've got to do your homework. You got to come in and do that work, go through the charts. Why? Because there's somebody that's been out there doing this for a much longer time than you, that's got much more capital than you, much more experience than you, that's also doing his homework. And I learned that lesson a long time ago where it was like, I would come into the market and I would just kind of wing it. I'd go on somebody's blog, I'd pick up a couple hot stocks here or there, and I'd be like, okay, I'm ready to trade, right? Or you wake up in the morning and you turn on, your platform. Doesn't work like that. So go through your gold stock list. There's a couple gems in there. In terms of the volume, I wouldn't really, Sylvina, I wouldn't read too much into it. If the volume was a lot bigger than these up days, then I would be concerned. The volume was a pretty standard volume compared to what it's really been at the last few days. And frankly, because it was so extended, you're gonna have yourself, you're gonna have yourself a little pizza party if it comes back down this way. Sake, Jimmy, never had a God sake. All right, oil, man. The one thing with oil, so it's been stuck in this range forever. This one's been just kind of hanging out. I don't see really any trend in this one, so it's probably something to leave alone. Home builders has been a nice trend all year. One thing to remember is, this is probably home builders is probably going to be a longer term thing, with paper money, right? The actual, currency, the US dollar getting negated. A different part of hard assets, I have to always diversify my own cash too. We're from, holding too much in the bank. A big part of hard assets is not just gold and silver, but it will also be real estate, over time. If you have interest rates at 1 or 2% on mortgages, you have really, you're going to have a rush of people that are just holding on and buying homes. This is probably going to be a longer term trend and something to be, definitely aware of. Now the S&P 500, this is the ETF for the SPY. This is also something that's looking like it's a breakout. So that's telling us that the overall market is pretty strong. You've got a breakout in the SPY. The NASDAQ ETF, This is the NASDAQ. So this is your tech stocks. This has also been at a breakout. So the trend is higher on pretty much, the general indexes, and the S&P 500 is looking like a breakout. So when I think about like what I want to do in the week, all right? What I want to do in the week, I want to always be thinking like, okay, what are like my bullish, bearish, and neutral case scenarios for the market? What are my bullish, bearish, neutral case scenarios in the market? And what that's going to allow me to do is have contingency plans. If my bullish case scenario is working, then I know, okay, I want to be long stocks and I want to do X, Y, Z. If my neutral case scenario where the market's just chopping around, then this is my game plan. And then I want to think about like, okay, what's my bearish case scenario? And that's the most important one to think about. Why? You want to always be protecting on the downside. Like, what if shit hits the fan? Well, you have to have a plan for it. Like if you're holding 5 stocks, 3 stocks, 4 stocks, you have a 401k, you have an IRA. You always have to have in the back of your mind, what if the conditions of the market start to deteriorate? What are you going to do? Like, will you react before it's too late and you lose a bunch of money? Or will you be proactive and say, hey, this is my plan. If my bearish case scenario starts to show in the market, and then from there, like how to act. So like for me personally, that's the one I want to always plan for. That way I can hit like my oh shit button, right? Where it's like, okay, I'm just dumping everything and I'll sit out for a little bit because like the market is starting to roll over. So you always want to be kind of going in with that scenario. When the market rises up like this, it's very, very easy to be complacent and think like, okay, the market's been trending. I can just buy some stocks. I'll hold on to them and I'll see what happens. And then, right, your kind of end of the world scenario happens like we had in, late February. And then like everything gets dusted and you're down 50, 60% on your names. And you're sitting there going, woe upon me. So always before that happens, come up with a bearish case scenario. So for me, like what I would want to see in the market before I would really get bearish on the market, because the trend is obviously higher. We've seen this going on forever. Where when the market gets extended, we always think like, well, it should roll over, and it doesn't for a long time. Trends can last for years sometimes. So we always want to be, what's an Alt F4, Omar? Never. What's an Alt F4? I'm not even sure. So what I want to be doing here is thinking like, all right, what would be like my scenario where I get really, really defensive in the market? So we're at the breakout spot right now. As long as this breakout spot holds, like I'm still really bullish on the overall trend. Now my neutral case scenario would be like, okay, if we break back under, and I watch QQQ versus the S&P 500 for like my overall gauge of the market, due to the fact that most of the hot stocks in this market, like if you're thinking about like what have been like the best runners in the market, and that's something you should be doing every week, digesting and breaking apart like what were the biggest movers in the market, what did they have in common, so you can find the next ones. The best movers in this market have been tech stocks. You haven't seen very many, right, industrial names and, stuff like that running. It's been tech. It's been healthcare stocks, tech stocks, healthcare stocks, tech stocks, and some combo of healthcare and tech stocks. And then, of course, you have your COVID stocks. That's when they start to really go. So I would only start to get really bearish. If we broke under this 50 SMA on the QQQs, that's when I'd start to think like maybe we're getting, a rollover scenario. Tech took a beating, but it's really only down about 1%. There was just a lot of high flyers that got taken apart on their earnings, and they deserved it. So I think that my bearish case scenario is if we break out of this range here that we've been sticking in and break under that 50-day moving average, at that time I would be really, kind of bearish on the market, where I'd say like, all right, things are happening. So now let's take a look and see like where the rest of the sectors are. So now once you go through these sectors, you have an idea of like what you want to do. So like you say, okay, natural gas is strong, solar strong, gold, silver strong, tech stocks are strong. Now you want to start to kind of build out your watch list. What you want to be doing is thinking like, all right, what can I do to find the next ones, right? What can I do to find the next ones? So there's a handful of things that you really want to be pushing, every single day. Every single day, there's a couple scans that you want to be running every single day. So the first scan that you always really want to be running is just a simple momentum scan. A simple momentum scan where you're looking for stocks that are breaking out with high volume. So like I have this liquid gainer scan. It's just fairly simple. You're looking for stocks that are up between 200 and 500%, volume increasing over 1 million. You want a relative volume of over 2, meaning it's got an expansion in volume. And I put 1.5 on the scan, but typically I like 2. And then I'll start sifting through them to see like really what else is going on. So I want to be really kind of focusing in on, like, even though the market was soft on Friday, there was a lot of stocks that were really moving. So like if you see here, like, so this Groupon, right? Groupon is coming out of a big base over here, up 56%. This stock is a pretty low float stock. What I mean by float is the number of outstanding shares that are open in the market. So you can see here with this like big increase in volume, and you coming out of that big base, like this is a type of name that has a chance to keep going for a period of time. The other thing is that like these kind of websites where you can buy shit on them, Etsy's, Wayfair's, so on and so forth, the Overstock, they've been the hottest stocks in this particular market. So Groupon is a similar name of that ilk. You came out, they busted out on earnings, so they had some good news out on Friday. Like this is something that probably we need to be watching for the next few weeks, for potential day trades and swing trades. How do you guys, like, who here's a day trader and who here's a swing trader? I think it's important to do both, but usually people like to kind of go in and, they have one particular thing that they like to do. Does anybody here swing trade, like do like longer term, like kind of 2 to 10 day type of stuff? Or are you guys mostly day traders? Ooh. Rahul, man, where you been lately? Hey, big baller, what's going on? So the second part of, when you're running through these liquid gainer scans, when you're running through the liquid gainer scans, you're looking for 2 different things. Number one, you're looking for stocks that you can trade the next day, right? What can I trade the next day? Like what's an opportunity for Monday? And then the second part is I want to be looking for stocks that may be setting up for multiple days. So I'm always going in for two-handed. Stocks that are setting up that I can play right on Monday that for day trades, and then I'm looking for stocks that I can be setting up for potential multi-day holds. And that's important. In a market where the market's just been trending, a lot of times you can get in too much of a day trading mode where you're selling everything for like 2 cents, 5 cents, 10 cents, and kind of ripping and dipping out of these things. And then, you end up looking at the stock and like 5 days later and it's gone up like 50% and you're like, what the heck did I just do? Right? And so I think it's important to have 2 separate accounts if you're going to do both, and make sure that you're really thinking like, okay, this is my day trade account, this is my swing trade account, and you're having a mix of both of them. I think that's going to be really, really important. So I want to flip through this liquid gainers list here, and you can have the scan if you want. Here, I'll send it to you guys. Yeah, it's important to run this every single day so you have an idea of like really what's coming around the corner. Like see something like this UFS. Like this is not something I would normally trade, but this type of setup has been working really well in the market. What I mean by like really well in the market is like you see how like you got this was big downtrend over here. Now you based out here since April. When you get a stock that's been going sideways for a period of time, when you get a stock that's been going sideways for a period of time, what ends up happening is that stock is starting to reach an equilibrium. So like you see this has been like in a big downtrend, right? And so as it starts to even out, that stock has reached some type of equilibrium where buyers and sellers have finally kind of settled down and the stock is done going down. So what will happen is once it comes out of that base, you could start potentially like a new trend. So that is Thanks, Andrew. I'm stuck on what? So when this thing comes out like that, can start a new potential trend. So these are things, this type of setup works really, really well, and something to just kind of keep mind of. When you see something that's like in a downtrend and it starts to even out over time and it comes out of that, like you could start potentially like something that's new, something that's new and hot. So there's different things to just kind of keep mind of. Good. So I want to go through this liquid gainer scan. Now this is more, you want to do this for day trading and swing trading. For looking at longer term plays, I'll give you a different scan to run. Good. Now, the second part is after I do that, what I want to be really thinking about, like, and this is a weekend homework, okay? This is a weekend homework. And if you want to be good at trading, like you really want to be an active trader, the weekend is what sets apart like the rest of the week. And you can do this Monday morning if you want to. The second part of, all trading that really happens, like I want to be really thinking about what were over the course of this last week. I want to be thinking about like what type of stocks have been really running, right? What type of stocks have been really running? Like what are some names that are going and what do they have in common? So like if you go back through like the whole list of the week, one thing that I thought really stood out was, first of all, like IPOs have been hot all week, right? IPOs have been hot. So like you can see, this is rocket companies. They don't actually make rockets, but it's like for Quicken Loans or Rocket Mortgages. Anybody ever seen the ads for that? Didn't even know mortgage companies move like that, but like this was like a big mover for last week with big volume. So like I like to go through these and see like what do these things have in common. You can see like this stock was at 68 and ran up to 104. So that's a 40-point move. It's like what do all these stocks like have in common? Now I think that's really important when you're kind of coming through these things, because it's going to give you an idea of what type of names are like really cooking. So like this PBI, this is Pitney and Bowes. This thing was at $2, went to $6.50. And I'll get to the point in a second, but I want to go through all of these stocks to really figure out like, okay, what do these things have in common? And was I in them? Was I in them? And if I was in them, what could I have done better? And I think that's a big part of your homework. Like, what could I have done better? Good. So I want to always go through these. So you start to see, like, this is like IRTC. This is a $200 name, but like it pretty much almost doubled last week. Like, what is this? What type of pattern is this? Like, what did it have in common? This apps was something I've been dickering around with in my swing account. And same type of deal. This stock's at $12, goes to $24. What does it have, what does it have in common? Like, what does it have out of its pattern that I can duplicate? You know what, Jimmy? I do like that one, buddy. ORTK, like this thing is up 55% last week. What do these things have in pattern? And I want to really be going through these like nonstop to really start to identify what type of stocks are moving in this market and what could I have done to get into them? And then is there a secondary play? Like anybody ever trade this pen? Like this pen was, this is a little bit of a larger company, $5 billion, but like this thing goes from $33 to $50 last week. What was the pattern out of this? So like this is a flat top breakout. This is a pattern that, we've traded back and forth for years. And a flat top breakout is a very simple pattern. A flat top breakout is just a pattern where, boom, boom, boom. It's just a pattern where you essentially have like a little tabletop on top. So what do you have here? So what are the parameters? So I'm seeing this type of pattern all the time. So what are the parameters for flat top breakout? What are the parameters for a flat top breakout? So this is a tabletop pattern. Good. So flat top breakout is something that's been near highs, that's been going sideways for a particular amount of time. So what we have here is, okay, I need minimum 3 tests of resistance to break out. So the rule of a flat top breakout is, something that's near highs, you need a minimum of 3 tests of resistance. You got 1 test, 2 tests, 3 tests on it. Okay, so this type of pattern's been working really well. Second part. What's the second part of this? Anybody know? I want the 9 EMA on the daily chart to cruise up under it. Good. I want my moving averages cruising up right up under it. So when it breaks out, like I want to see your 9-day moving average coming up under it. Good. We call that curls for the girl. All right. When the stock finally crosses over resistance, when it finally crosses over resistance, we want to buy, make the buy with a stop loss under. Good. So like you want to come in and say like, okay, if it crosses over at 40, my stop loss goes on the 9 EMA, so I risk like $1, $2, and now we're going to be going. All right? That's the rules of the game. So now what we want to be doing is we know this type of pattern works. We want to be finding more of those opportunities. So when you start going through your liquid gainer scan, your 5-day gainer scan, now you have an idea, okay, this is a type of pattern that I'm looking for. So trading is all about just having recipes for different patterns, all right? Trading is all about just having recipes for different patterns and then going with it. Good. Now, what other patterns have been working in this market? Yeah, like short consolidation patterns have been working very, very well in this market. So what I mean by a short consolidation pattern is anytime you see a stock that's gotten like a nice trend and then it starts to go sideways for a period of time, what typically happens is that first consolidation gets bought up. So this is like a second type of pattern that you would be looking for in the particular market. So what I mean by short consolidation pattern is if you're running your liquid gainer scan, you're running your momentum scans, as soon as you get some type of sideways action, usually the first 3 to 10 day sideways consolidation on it, the first one after a big move typically gets bought up. So what I'm saying is like you see this stock has some earnings on it, starts to go sideways. Stocks get their power from consolidation. They get their power from basing. So your first 3 to 10 day, and it's usually 3 to 10 days. If it goes any longer than that, it turns into a flat top breakout. You may be sitting on it. For a long time. So you got 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day, 8 day, 9 days. Buy, set your stop under the 9. So it's like a very, very simple type of pattern. Okay? I'm using this type of pattern we use it pretty much all the time. You get the stock goes from 60 to 80, right? You got a nice 3 to 10 day consolidation, stop loss under the 9 EMA, and a go. So what are the rules of this type of pattern? So every single pattern you trade has to have rules to them, all right? So like we would just call that a flag pattern. So there's a handful of things you need to see. So what's the recipe for this type of pattern? All right, the recipe for this type of pattern, you want to see a 15% minimum move. You want to see a 15% move, so like in the thrust, right? I want to see a 15% move into the thrust. I want to see 3 to 10 day consolidation, meaning it's just going sideways. It's just going to sit there, cruise around in a really tight range. And then from there, we want to be going in and buying it as it breaks the consolidation with a stop loss under the 9. Buy, break, of consolidation. And then, of course, you always want to put your stop loss under the 9 EMA. So when you think about trading, like, you have to have a cookbook. There's so many different patterns out there. You only need to be good at a few of them, all right? You only need to be good at a few of them. But the patterns you trade, you should have rules out there governing how you trade them. This is my recipe of the things that I want to see. This is how I will act when I see them. And then, right, these are my action steps. And then if you can do that, now you're going to be able to have yourself, some fun, right? Now you're going to be able to have yourself some fun. Because when you have a set rules and you follow them, that's how you get consistency, right? That's how you can start to measure results by saying, because you're doing the exact same things over and over. And when you do that, now you can start to really monitor your progress and how things are working. But if you sit around and YOLO all your trades, right, where you buy on a tip or you buy because of this, then, and you don't have a recipe of something you're following, then it's hard to measure your results. You'll say like, okay, I made some money this month, I lost some money that month. Anybody ever do that? But if you're trying to like make money like every week, right, or most days of the week if you're day trading, then every single trade you take has to have a specific blueprint. That way when they start to go wrong, you can look at your business plan or your cookbook of recipes for all your trades and start to see like where you're faltering. And that's how you go back and fix some of your mistakes. You know, if you have everything written out and you have rules governing all your behavior, then when you're not getting the results you want, you can go back through and say like, okay, these are the pieces I'm missing. So now I know what I have to fix for the next week. And that's how really good traders operate, because when you can do it that way, you don't have big slumps. You won't have big slumps because as soon as you start making a few mistakes, you're able to go back through, pinpoint what you did right and wrong, and then like you want to be, you know, and then you can go through there. And a lot of this will also have to do with trade journals and stuff like that. You want to always be thinking about like, okay, what are my best trades? Like, so journal out your trades. You can use, there's so many online softwares now, Trader Sync, Trader View, so on and so forth. So this is like, I'll give you kind of like one thing that I personally, you know, like to do. I personally like to do in my own trading, which is I like to catalog, you know, this is part of my just Sunday routine. So like you'll see like over the years, like I'll have like a million of these kind of just setups set up where like, and I can go back for like years, you know, years and years and years. So like if you go back through here, I've got like so many of these. So like every single day, what I'll do is just take a snapshot of, you know, what my P&L was for the day, meaning how much I made or lost. And, you know, some days like I lose, right? Some days I lose. Like, you know, like this particular day I lost $2,000. And this particular day, you know, I made $3,000, so on and so forth. And what I'll do is like I'll take my best trade. And I'll go through and I'll kind of write down 5 questions. You know, number 1, what was my setup? Number 2, what were the overall market conditions? Number 3, did I add and hold on to any winners? Meaning like, if it was working for me, was I getting better at it? You know, did I get in as big as possible? And did I make any trading mistakes? And so like I've got like thousands of just pages of this stuff where I can go in and say like, this is what I made, this is what I lost, and I'm going through my best setup. I think that's going to be really important when you're trading. So many times we focus in on like all your trades and what you're doing right, what you're doing wrong, so on and so forth. And we forget that what we really need to be doing is cataloging. We need to be cataloging like our best trades. Since I trade futures and I trade stocks, so, you know, I usually will have, you know, like what's my best futures trade and then my best stock trade. And so I want to be doing is I take a chart of my best one. I take a trade of my best one and I start to put in like, okay, where I bought, where I sold, and so like this one I'm particularly like I'm shorting it, meaning I'm betting on it to go down. And then this is a futures trade. So I do like, futures trades, you're just trading indexes and so on and so forth. But what I'm doing is like I'm putting down categories. So like I want to write down what my setup is. What my setup is the pattern. Why is that important? Does anybody know? Well, you need to know the pattern, right? If it doesn't have a name of the pattern, if your pattern doesn't have a name, then you don't have a recipe. Remember how we were talking about like you got to have the recipe for every single trade. So if you don't have a recipe for the trade, then the trade is going to be not so good. So, man, that was so Trumpy right there, right? It's not so good. So I want to have a name. Every single name of a pattern, I have a recipe for it. A list of conditions I need to see, and then how I will act, and it will govern my behavior. So like I'm going to write, okay, intraday bear flag. That's my setup. And I'm just going to put, I'm not going into anything epic, right? I'm just going to put in like a handful of quick things that describe my pattern. And I want to be cataloging my best trades in this particular reason. For many of you guys that have been trading a long time, like some of my students in here, like Noah, for example. Noah, you've been with me for years, on and off for years. So like this is a good thing for you because you're already doing a trade journal and inputting in like 40-day trades every day. Sure, like that's okay, but that's not going to get you closer to where you need to go. So like if you come in and think about what your best trade is of the day, and then you catalog that, now you have like a whole journal of an idea of what you do right. So like I categorize, and I just put in Evernote like what the pattern is, and then or the name of the pattern. So then I can flip through and be like, okay, I'm doing these bear flags really well, or I'm doing these earnings breakout. You can see on a lot of these they say earnings breakout or ORB short. So like that's going to give me an idea. The second part I want to write down is what are the market conditions. How was the market reacting that day? And then the third part is, did I get in as big as possible? Meaning you don't have to be an all-in on every single trade. All-in on every single trade. But what you want to do is get in as big as possible according to your risk parameters. Meaning if you've got say, $200 risk, were you actually going in and doing that? Oh, Jimmy, I might make 50 day trades in a day. I mean execution, sometimes 100. Did I get it as big as possible? Number 4, did I add to my position? Did I add to my position? What I mean by add to my position is I have statistical evidence, at least for myself, that my best trades, like I'm adding, and then as it starts to trend, I'm adding more and more. I'm adding more and more. Like I'm adding in more and more and more. You can have, and when you're day trading, like having a one-shot pony doesn't necessarily work. Like I know for myself, if I have a hot one, it's like I'm in, and then it starts to work, and I'm like taking some profit, and then I'm reloading some, and adding more risk. And that's just a personal preference of something I've noticed with mine is like as I get a winner, I am adding to it. And then the last one, and I think this is important. Hey, Joe Smith, I do not, I'm in there with a handful of others, but it's with free commissions now, there's really no point. Did I break, and the number 5, did I break any rules? Did I break any rules? I think that's going to be important. You got to catalog like if you're breaking your rules and so on and so forth. So these are the different questions that you want to ask yourself. So on Friday, on a Friday or Saturday or Sunday, when your trades are done, go back through your list of your best trades of every day. You had 5 days. Okay, what was my best trade of every day? Start to memorize and catalog what you're doing right. Maybe, Jimmy, but I'm a day trader. That means you take day trades. There's no right or wrong way to skin a dog or however you want to say it. But who knows? I've only been doing this my whole life. Maybe I'm wrong. I've only been doing this my whole life. Maybe I'm wrong. But maybe I'm right. That's the way it goes these days. So that's how you want to journal out your trades. Anybody got any questions on that? Yeah, I'll send that to you. Hold on. So the questions you want to ask yourself. And it's very simple. Just take, anybody use this program, Light Shot? Yeah, you're just taking a snapshot. Light Shot. There it is. Like you just take it just takes a snapshot. You just add it on your thing. And yeah, you download it for Windows, and then all you do is just hit print screen, and then like it'll take a picture, and it just turns it into a link or a file, and you just drag it into an Evernote or your Apple Notes or whatever you're using, and you're good to go. You're good to go. And then once you have a playbook, so I got like thousands of those. So like anytime I'm struggling, I can go back through and catalog like, man, this is what I'm doing right. This is what I need to go back to doing. When I'm making money, these are the trades that are helping me. So the first thing, right? Write down name of setup. All right, I already sent that to you guys. You guys are good, right? Market conditions. Did I risk as much as possible? Did I add to my positions? And then did I make any mistakes? Very, very simple. Rock and roll. Good. Maybe, Jimmy, but then you miss out on all the other good trades. I'm not a believer in that. I think traders trade. At least the good ones. The punanis, they wait. They sit there and bide their time and they miss out on everything. Hey, JC, that's a good question. So when I want to add to a position, it's dependent on setup. Meaning, like, for example, I'm just making it up. This was the ticker that's up. So, like, say this trade, I added 500 shares here. This is a green to red trade. This is a green to red trade. Good. So this is a green to red trade. So maybe I add 500 shares, all right? And my stop loss goes here, and I'm risking like $1 on it, for example. Now this thing will like flush down. Well, this is like 3-4 points. So I'm going to be taking some off the table here, right? I may even get out of the whole position here because I've got myself a decent gain. And then what's going to happen is like I always keep a lotto of like a third or a fourth. And then what'll happen is like as I see it, say I got 500 shares and maybe I got 100 or 200 left. Then as like I see a different setup, like maybe this thing goes into the VWAP or something. Maybe I add a couple hundred shares here and then I raise my stop loss on the whole position up here. And then what'll happen is like as this thing starts to confirm and I get a different pattern. So only on different patterns, all right? Only on different patterns, JC. Then maybe I add the rest, maybe I add another batch here because this is like a bear flag. And I put my stop loss on all shares above these EMAs. So now like I've got, I've added multiple lots to the position, but I'm also lowering my stop loss on the whole thing. So when you add or scale into a position, don't come in and be just like, keep adding, but then, your stop loss is still up here. Like trail that thing down. I will. So like if I'm trading multiple positions, JC, I'll just use a hard stop loss. If I was trading one, then I can watch it. But like, for example, like on Friday. Friday was wild. Like Friday, there were so many stocks like this that were, turning. You had GSX. Look at this thing. We were shorting a lot of names. You had this overstock rollover. It's like when there's like a lot of names that are like rolling over, and I've got to be in like 2 or 3 positions or 3 or 4 positions, and I trade it like, I have like 5 different brokerage accounts up. I'm like kind of moving and shaking in all of them. Then I got to use a hard stop loss because it's really hard to manage them all. Manage them all mentally. Like, it's right. Like mentally, like how are you supposed to keep track of them all? So at that point, like I would just put a hard stop loss. And if I had like say I was short this and it was just trending down its 9 EMA, and I've got only like a few hundred shares left. Hey Tarjay, how are you? then you could even do a trailing stop loss and just put like like a $2, $3 trading, $2, $3 trailing stop loss once you got enough kind of juice on it, and then go for it. Randy, you hit this? I friggin' missed this one. Yeah. I was looking at I was in every single one except this one. Yeah, so that's why that's when I would use a hey Cross, how are you? That's when I'd use a physical stop loss. Good. Hey Tarzay, where you been lately? It's good to see you. All right, and then I think this is, if anybody's like a swing trader, one of the things that you really want to be doing on Sundays too, so just after your trade journaling and all of that stuff, if you're a swing trader, one thing that you really want to be doing, you want to be aware of what are the top 100 stocks in the market for trends. So like, if guys, anybody who's a longer term trader, swing trader, and even as a day trader, this is a good thing to just have. What are the top 100 stocks of the last 90 days? And you got to really become intimate with them. As traders, especially swing traders, those are people holding for 2 to 14 days. You have to be in the biggest trends possible. Why? You want to be able to make your money work efficiently. Like if you're trying to buy something cheap and it's just stuck there, and you're in a hot market where everything is pushing, then even though you may not be making money, or you're making even a little bit of money, there's an opportunity cost. If you're in something for 2 weeks and it goes up 5%, but something else goes up 50% that you were looking at, right? There's an opportunity cost there. So like for big chunk of like my swing trading kind of strategy is I want to be aware of the best trenders in the market. I want to keep them on a list. I want to go through them on Sunday and see which ones are ready, because stocks that trend, they tend to pull back to support, or they tend to consolidate and break out again. So every Sunday, like I want to go through, and I don't trade very many small caps. So every Sunday, like I want to go through, I will for day trades, but I won't hold them overnight. I want to go through like every single stock, and go through the top 50, right? And start to see like which ones are setting up again. So you can see like this NVAX is up 900% the last 90 days. Like that's a big trend. Alt is up 700% the last 90 days. But what you'll start to see is like these type of stocks, they will set up over and over and over and over again. Over and over and over again. Like see like this workhorse is like something, you've been coming in a big consolidation for a long time. Like if this stock breaks out, like that's going to be probably something that can keep running. So I want to go through this to see like which ones, like this was something, we had been messing around with. Which ones of the top 100 momentum names of the last 90 days, the top 100 momentum names of the last 90 days, yeah, I'll send this to you guys. You can just input that into your TC2000. Out of the top 100 momentum names of the last 90 days, which ones are coming back into support? Which ones are coming back into support? Which ones are starting to flag? Like which ones could run again? And I think that's going to be like really important. Like this FSOI could be something for this coming week. You've got yourself, so this is number 11 on the 90-day momentum scan. So this stock is up 248% in the last 90 days. So we know it's got a big trend. Now at this point, like you can see, this thing was at $120. Now it's starting to pull back into your 50 SMA. And you can go back here. You've got a lot of price support sitting here around the 75 spot. So like if this is something that starts to hold at 75, like that could be something that's in play for this coming week, where not only for day trades, but right for that longer term swing trade. So I want to go through this every single Sunday. Like, last week, like this stock was sitting on its 20 SMA, right? You get like a big push. If you focus in on the best stocks in the market, what you'll see is they'll start to trend, and then you'll get the different patterns start to show up, right? This is like your flag pattern, 9 EMA curls for the girls, and then a go. So you really want to be kind of focusing in on these things, right? Penn is number 15 on the list. Had a flat top breakout. Every Sunday, if you go through this list, that top 50 of the hottest stocks, and then you put in the price range of the stocks that you put in a price range of the stocks that you personally like to trade. It could be 1 to 10, it could be 15 to 30, so on and so forth. I got mine at $15 plus. Start to see which ones are setting up again. Like this is something, the CRNC. This stock had earnings out. On, it looks like Tuesday. So you had a big move from earnings. You got the $56. Now what do you start to see here? See how you got a really low volume pullback that's starting to come back? So when you get a low volume pullback on a stock after an earnings move, right? So this is an earnings push. What pattern did we just learn here, right? You got flat top breakout. So you had earnings and now you're starting to pull back, right? Just a nice low volume. If this thing starts to pull back, it either holds at the 9 EMA or this flat top breakout spot. You start to hold there. You get a green candle to hold, all right, at one of those spots. What we call that is a confirmation candle. That sets up a swing trade for it to break back into, right? Stocks will push, they'll pull back, and then they'll go again. It's like that's something that looks like it could be really hot for next week. That is like something, you can put in your swing account, your IRA, so on and so forth. Like this LVGL is another one. This one was a buyout, so it's going to trade a little bit different. But like you got yourself like a nice kind of pullback into these support levels. Go through this whole list. See this fiver? Like this could be something. If you see where it starts to hold, when you get the confirmation candle, then you know. Now this LB is actually really interesting. I hate trading retail stocks. Retail stocks, unless it's like an online retailer, like physical retail stocks in malls have been like a tricky trader the last couple of years, but there's no doubting the trend on this one. So you had a big breakout day on this one. See this 38 million shares? Anytime you get a breakout, I would keep a specific scan on that. Anytime you have a stock that just does like 1 or 2 or 3, 4 million shares, and you have like a 30 million share plus breakout, it's something that you'll need to keep on your watch list for the next month or two, because that first consolidation, that first pullback, they tend to get bought up, and then you get like a secondary breakout. So like this LB is number 26 on your 90-day momentum list. And you guys, every Sunday, without a doubt, go through them, all right? The more you go through the list, the better you train your eyes to it. If any of you guys are just brand new or having trouble getting consistency, the more charts of momentum names in specific that you flip through, the better your trading is going to be. Trading is about pattern recognition and then, of course, the discipline side of it. But in the beginning, you need to be able to train your eyes to momentum. You need to be able to train your eyes to trends. How does it look? How does it feel? How does it react? And when you keep cycling through them, you are training your brain to what momentum looks like. Because then, when you get stocks that can move 50%, 100%, 200%, these are not small caps or pump and dump companies, right? These are regular companies that can do that. But when you can train your eyes to do that, over time, you start to just take it in. Where now you know, okay, like these are the type of charts that I want to look at. This is the moving averages. This is the volume. These are the different things that they react to. And when you can go through hundreds on hundreds on hundreds of charts every single day, it won't take you long. On T1000, you just hit the space bar. By the end of the year, you have looked up over 100,000 charts of pure momentum. At that point, you're going to be able to spot it. Whether it's during the trading day, whether it's at night, you're going to be able to spot it. You're going to be able to see it. And that is how you get, frankly, that's how you get good at this stuff. So like this LB, I'd flag this. You got yourself a nice kind of consolidation that it's been building out here. So this is right, 3 to 10 day consolidation. Now my only worry on this is the 9 EMA is still a little bit of ways away on it. It may not matter, but like ideally like another day, this thing will come up right up. If it goes sideways one more day, this thing will come up right up under the kitchen. And when it comes out of this, it's going to be good. So this is a 15-minute chart on the right side. But this is the daily chart. When you're doing your scans, you want to focus more on your daily chart. Keep that on your list. Every Sunday, see this ARNC? Right, you get yourself, right, a nice kind of consolidation going, but it's only 2 tests, right? 1 test, 2 tests. It needs to really come back and do a 3rd test to break out. See this LRN? Like this has been, first of all, this sector has been red hot this whole year. This is education and training services. Online education companies have been the tour du jour of the market. Why? People are sitting at home. People aren't going to school. Nobody wants to go to school. Nobody wants to go anywhere. And even before coronavirus, that would have been probably the thing anyways. That probably would have been the thing anyways. So you got a nice consolidation over here for the last month. Like if this thing starts to push out of range, that one looks pretty good. SQ, this is one that I'll be stalking this whole week. So SQ had its earnings out. See this gap? Anytime you see a gap like that, it's usually due to earnings. So you got earnings come out on this bad boy. So you got this gap up. It ran to 160. Now you've had a nice kind of like 2-3 day pullback right back into like where the breakout spot was. If you get one more kind of pullback on this, I think that this one will have a chance. I think this one will have a chance to enter for swing trade and also for day trades. This is a good mover. It's got more than enough range. So if you look here, the ATR on this, the average true range. When you're day trading, keep an ATR or average true range on your chart. And I just use it as a number figure. Why I want to do that is I want to be able to know how much. Average true range means how much is this particular stock moving around per day. So if you're trading a stock that's like $100 and its ATR or average true range is $1, are you going to really be able to kind of ebb and flow into it? Good. You can't, right? It just doesn't have enough movement. If you've got an ATR of $7 or $10 or $15, now like that stock is moving around enough where you're able to trade it back and forth. You're able to trade it back and forth because for day trading, you only need a few dollars of that chunk. How much of that chunk do you really need? Not that much. So that's where you want to go, and I always want to go in with a nice average true range. Every Sunday, go through these things. So let's summarize what we have to do. What do we have to do on Sundays? Number 1. What's the first thing we do on Sunday? We go through the index list. All right? I sent you guys, 30 ETFs to watch? Number 2. Right? Once you have the index list and you know which sectors are hot. Gold's hot. Silver's hot. Solar's hot. Once you go through those, look inside the individual sectors for stocks for the best patterns. Most momentum. Things that are going to be ready either on Monday or for the coming week. Right? 2 things. For Monday and the coming week. You always got to make 2 lists. 3. What's the next thing after you look for that? Right? Run your liquid gainer scan. Good. After that, right? Run a 90-day momentum scan. Now, build out your watch list. On the other side of things, right, you want to go through your trade journal. What are your best trades, right? Best trades each day. So you want to journal out best trade of each day. Put in your P&L and ask those 5 questions. 5 questions always ask yourself. What's the name of the setup? What are the market conditions? Did I take as much risk as possible? Did I add to my position? And then did I make any trading mistakes? Beyond that, if there's certain things that you need to add to it, right? Ad-lib it, change it around a little bit. It'll be fine. Make that part of your journal your own. Like what's going to help you the most. But the best way, the ideal way to have it is, it's like a flip book, right? Or where you can flip through and see your best trades, your best setups when you were at your best. So many times we focus in on what we do wrong. I'm doing this wrong, I'm just not getting anything going. When I look at like my students, and I've mentored thousands of students over the years, but when I look at even my students that are having trouble making profits, the one thing that I've noticed with all of them, even when they're having trouble making consistent profits, they tend to do one or two things really well. They have one or two patterns that they trade well. They have one or two setups that they own, that they have a mastery of. It's the other stuff that gets them in trouble. So a big part of trading is not just sitting there working on your weaknesses, but figuring out what patterns you trade the best. Even if there's just one or two, you can make some money. So figure out what your best ones are, and that's why doing your journal this way will help, because even if you stink, I guarantee you out of all the junk that you guys do, if I look at all your trades, I'll be able to find one type of trade that you do pretty well. So then we want to isolate it and learn more about that trade. How can we do more of that trade? Can I build a filter on TC2000 or whatever scanning you're using to find more of those opportunities? Can I do something to cut out all the fluff in my trading so that I can focus in on this one, learn more about this one, and then you're going to be going. Jason, I don't do much. I trade mostly the micro futures now, and there's really not much to them. I use the same patterns. I use just the same patterns as I would in stocks. There's not really much to it. So do your trade journal, ask yourself those 5 questions. That's your weekend homework. If you can do that every single weekend, you're going to start to pick up a lot of stuff. Just know, right? If you're not doing this homework, somebody else is. Try to get to it. If you're new and you've just never traded before, try to get to 1,000 charts a day. On your TC2000, any charting platform, all you got to do is hit spacebar to go through charts. Try to get to 1,000 charts a day. You get to 1,000 charts a day, right? By the end of the year, there's 250 trading days in a year. By the end of the year, you have 250,000 charts under your belt. If you get 250,000 under your belt, there's very little that you're not going to understand about momentum, how things look, and how they react to each other. When to use which moving averages, when to take on indicators, when to take them off, so on and so forth. You get yourself to that point, you're good to go. And then the big part is, remember, every single trade you do, it's got to have a specific recipe to them. If you don't have a recipe to them, then you're going to have a little bit of trouble. So you do flat top breakout, you should have a recipe to it. You do a flag breakout, you should have a recipe to it. That's just list of conditions that need to trigger before you enter. That's all it is. You do an ORB, list of conditions that must trigger before you enter. You do a VWAP trade, list of conditions that must trigger before you enter. If you have set rules, and just put them on sticky notes if you can't remember them in the beginning. Once you do it 1,000 times, 2,000 times, you're not going to need any notes, right? You're not going to have sticky notes on this thing. But in the beginning, when you're a novice at something, right, you work off a checklist. When you're an expert, you work off intuition and accumulated experience. That's the difference between a novice and an expert. One has to work off a checklist, and even if you work off a checklist, you can still be successful, right? You just have to do it in a very, very specific order and never break rules. Once you build expertise, because you're working off intuition and accumulated experience, you will know when to ad-lib. You will know when to ad-lib and when to change or call an audible. And when you're a novice, you don't want to call any audibles because it gets you in a slippery slope. Once you start calling out audibles and you're brand new, it's a slippery slope because you're just breaking rules. In the beginning, it's just about can you follow the rules, and then you'll have a specific win percentages that you'll just win or lose depending on the success and efficacy of that pattern. Once you have expertise, because you can manipulate and ad-lib on any pattern in any given market situation due to your expertise, then you can win all the time because there's no situation where you can't adjust to it on the fly. And that's when, right? That's when you're next level seeing the action. That's when you're in the matrix. That's a whole different thing. You need thousands of trades and hundreds of thousands of charts under your belt. The key is to get to the 250,000 charts. Is it going to take you a year? Or is it going to take you 10 years? You got to pull, you're going to have to pull that Band-Aid at some point. If you're going to do like 50 charts a day, then probably to gain expertise, true expertise, it's going to take you a decade. At that point, if you're just doing this to make money, I mean, you're better off doing some MLM thing where you're selling makeup to your friends and skeezing your relatives for a couple coins. Right? But if you're like trying to do this and you like doing this, then the quicker the better. You're going to have to get to that 250,000 charts. You're going to have to get to that screen time and the thousands of trades under your belt before you feel comfortable. It's a matter, do you want to do it in 6 months, 12 months, or do you want to do it in a decade? So I always go with the quicker route, but that is just me. What can you do? Hey, Randy, you know what? That JMIA does look pretty good. Yeah, let's bring up some tickers that you guys are looking at. Guys, by the way, if I didn't see your question or anything like that, it's just because I'm looking at the charts, not looking at the YouTube thingy. Yeah, but let's take a look and see, what you guys are looking at. You know what? I do like this. This company's a huge turd. This is like the Amazon of Kenya or something. But it's been a monster run. In the end, price is the only thing that matters, and price is the only thing that pays. Whether it's a turd or not doesn't matter. This thing is, hey, thank you, Sylvina. This thing's got a nice pattern on it. It held support down here. Had a big day on Friday. I would say, that's probably a potential. The earnings are out in a couple days, though, so it's probably not something you can hold. Well, it's not something you can hold. You can never hold a company like this over, into earnings, because there's a big shot this company doesn't even have earnings, right? And it's just got on a monster run anyways. The easy money's definitely over, but you do have a trade here for a day or two. James Vincent, where you been lately? KZIA. Now, this thing is probably a huge gelatinous pile of excrement after eating pizza and Taco Bell. Most likely, this thing is a turd. Two things you can always tell when it's a turd. Number one, has it pump and dumped in the past? Meaning, like, this thing's $2, it ran to $10, right? And then it dumped all the way back. So that's a pump and dump stock. This thing pumps and then it dumps. So on Friday, somebody pumped it and off it goes. Well, you see, like intraday, it faded off the whole day. So as soon as the market opened, right, there's probably a whole group of suckers buying this thing at the top, and then this thing faded off all day. So when you're dealing with like small cap stocks, you got to always look at the past history and say, like, does this got anything? Or is this a pump and dump? Is it a pump and hump or a pump and dump? Right? There's two different types. A pump and hump, they keep going. But a pump and dump, this is a no buenos. Right? A pump and hump, at least you have fun for one day. So like, this thing is always a turd. So I got to be careful on these kind of names because it's just no good. Yes, we have Bootcamp class starting. Bootcamp starts tomorrow. So our 60-day Bootcamp starts tomorrow, 6 p.m. I'll see everybody in class. all old Bootcamp students, Noah, Johnny, Timmy, all Bootcamp students. My students have lifetime access to classes. They can come in as many times as they want. You guys, I better see y'all in class tomorrow. AMD. So Rahul, I did see the Indian matchmaking show, by the way. It was very funny. So AMD, it did a flat top breakout here at 60. This is another one, like this thing's just long in the tooth. It's got to pull back for a few days. Overall, like it's got an awesome trend on it, but it's just long in the tooth. Hey Danielle, how you doing? So this SRNE's, like it's got a nice chart to it. It's up a double in the last few days. So like I think you can still day trade this thing back and forth, but I don't know like if it's a swing trade. So you got to always identify, right? Like swing trade, day trade. When you're up this much, you can keep day trading it back and forth, but you can't buy anything for a swing trade or investment up here. That entry would have been, you know, better at 8. ACU. So this ACU doesn't have any liquidity on it. I'm not sure. Mr. Chang, so like Intel here, you know, this thing's been a dog. If you think about like trends, in this market, there's so many trends in the market that, you know, hitting Intel, like while it's just sitting here in range, probably not the best use of your time. You know, so if you want a semiconductor stock, like you can go and, you know, if you look here, so I got a semiconductor list here. Do like a 90-day sort, and you start to see like there's all sorts of semiconductors that are like really pushing. You know, I think you can find like better names. Like you can see here, there's a whole host of these things. You know, like NVIDIA, AMD, Maxwell. There's a whole host of them that are really, I mean, that are hot. I think, you know, probably pass on the Intel. I mean, there's just some good looking names in the sector. I just go through them all and see like which ones are like about to break out. Like you don't want to be stuck in anything that's just going sideways or down. Yeah, I think you're gonna have some better names out there. Oh, hey Martin. So here, I'll send you this layout. Just click it. The layout will open in your platform, or like if you don't have a platform, then it'll just take you to a download, and then it'll show up in there. So in your T3000 on the right corner, you click that 3-prong button, and all the somebody sends you a layout, or you open a layout, it'll show up in there, and you can just open it up. But this is like my main layout when I'm day trading. This TSM is okay, Andrew, too. I think this one's also, it's a really nice name, but like it's a little bit long in the tooth. It's going to have to kind of back and fill here, and, you know, I would 100% keep it on your list. I don't know if it's ready at this exact moment, but it does look pretty good. Man, Hewlett-Packard's a turd. This thing never moves. You know, the float on this thing is so monster. It just doesn't have any range. So its intraday range is 32 cents. At 32 cents, it's just, what's the point? PRCP. This looks like a pump and dump too. Reef. You know, this thing pumped and it's dumped. And look at the volume on this thing. 140,000 shares. So it's only $4. It's only $4. So you can go in and Danny, you can just click that link and save it. By the way, hey Danny, it's only this $400,000 in volume. That to me, you're at the only way this goes is if some asshole with the chat room with like 1,000 people in it is like, wow, this has no volume. I'm going to buy it and get, all the goofballs in my chat room to buy it too. And then it'll go. If you guys ever join small cap chat rooms, just be mindful. I mean, it's one of the reasons I don't trade them as often, or I won't alert them to my guys. The whole game for small caps is based on deception. If you have a small account, it's easier to trade a $50 stock and have 100 shares and trade it back and forth if it's moving around $5, $10 a day and kind of play the ebb and flow than it is to have 1,000 shares of a $5 stock. When you're new, and I got stuck in this game before when I was new. When you're new, you think 1,000 shares of a $5 stock is better than 100 shares of a $50 stock. But what you got to account for is range. If that $50 stock moves around $10 back and forth, and you're taking a dollar here, $2 here back and forth, that's much easier to trade back and forth than a $4, $5 stock that doesn't move at all. That doesn't move at all. And that's where they get new people. So small caps is just based because the marketing is based on deception. Hey, if I have $2,000, I can turn it into $50,000 or whatever, because XYZ stock will go up. Not really. It's just meant to sucker new people in and take their money. Then they move on and find the next new person, take their money. Good. Hey, Dakota, how are you? As a day trader, are you looking for a specific pattern that you can trade? Dakota, yes. So we trade a handful of patterns, and on the YouTube channel, I've got 1 million of them. And my guy, Nick, he'll send you some beginner classes. We got and some videos. We've got 1 million patterns that we trade intraday. But like an easy pattern, Dakota, that I trade intraday, is like an easy pattern you could trade intraday. Like I do these on like IPO stocks and any kind of momentum stocks. Run a momentum scan at the open. Yeah, Sam Sneak. I hear you, man. So Dakota, if you run a momentum scan on your broker or TC2000 or wherever, in the morning, like go look for like maybe stocks up. I do this pre-market, stocks that are up 3% or more before the market opens. All right, and then start looking for like specific patterns. Like this RKT was a pattern like we ripped on Thursday. It's like this is an IPO. This is an IPO stock. So this stock opens up, and you start to build out. Like see how like you just build out like a nice easy level here. So I'm looking for like a handful of things. So like this stock pushes from 17 to 1950. So it fits my requirement. I need stock up 3% or more when I'm running this thing. And then what will happen is you'll start to build out a level. I'm looking for two things. Does it hold at my MAs? So like I got my 9 moving average, I got my 20 moving average. Does it hold above them? When the range tightens, like you can go in and as soon as this thing books, so I like to get in a little bit early. So like I added this thing in 1955. This is small, couple thousand shares. And then like as this thing starts to go and like you get the confirmation, like when it break a resistance, then I'll usually double up on the shares because you got 1 test, 2 tests, 3 tests, 4 tests, 5 tests. And like now you're off to the races. Now you're off to the races. So like that's like a very, very simple pattern. And I mean, I trade a whole host of them, but that is, how I would, that's how I like to trade. I look for momentum. Then I look for tightness of range and levels that are made. Once it busts over that, woo, now you're off to the races. This was an awesome week for IPOs. I had a couple of them that I just shredded. Yeah, I had this big C on Thursday, and this is like the same deal. So like Dakota, like a different type of pattern is like, so that's a breakout pattern, right? A flat top breakout pattern. A different type of pattern would be like a pullback pattern. What I mean by a pullback pattern is when you get the momentum at the open, right, I'll wait till it pulls back either to the 9 EMA or the 20 EMA. When I get a green candle to hold and it breaks over the VWAP, I'll take a position and, put a stop under the low, and then you can get this thing pushing back into this thing. I had this thing at 84. It hit 104 in 15, 20 minutes. So that one's a pullback pattern, one's a breakout pattern. I like to do both of those. I think when you're day trading, and hit me up or you can email me if you got any questions on it. And then on the other side of things, you can do like ORBs, quick pullback buys and stuff like that. Different types of patterns. What time is it? Almost noon. I'm on Central Time. CTSH. You know what? This does look fairly okay. Yeah. Cognizant is a bigger company. My only worry is that you got this resistance right on top of it. So it's a little bit of a tweener. It's not a huge mover, but in general, it's pretty good. Yes, you know what? I've read all the William O'Neill books. Very good stuff. I mean, he's the inventor of a lot of the trend stuff, right? Yes, FDX looks pretty good. Yeah, you know what? FDX usually doesn't have any good range, but Friday, I believe, it did. Hey, Neil, this SQQ is really a tricky one. I know a lot of people like it because it's just cheap. But like these inverse ETFs, there's a time decay on them. I love IPOs, Jimmy. I've made so much money on IPOs. There's a time decay on these inverse ETFs. It's like they're fine for day trades, but they're really hard to like buy them like long term. Because the time decay makes it so that they go down more than what the market is going up. Hey, Big Baller! What's up, brother? So, pre-market, all pre-market trading is it's just like a tab. It's just a tab on your brokerage platform. You can buy and sell pre-market after hours. Like, stocks are moving around 6 a.m. to like 8 p.m. Not a lot of them, but there'll be a handful of them. Like, see, this thing was moving around after hours. It's just a tab on your broker. What they would call it is extended hour tradings. So, like, when you're doing your buy-sell, you have to click extended hours, and then they're moving around pre-market. When you, Big Ball, when you do pre-market trading, though, you still want to have the same kind of pattern. You want to still have an idea of like rules, right? You don't want to just blindly buy stuff. Like, get stuff that has a pattern, has some type of edge to it. But yeah, you can do them. Stock has some hot news out. By the time the market opens, sometimes they're up like 20%. So you can, if you're up early enough, you can shred those into pre-pre. Good. Anybody else got any questions? I apologize if I missed any. When they come in hot and fast, you know how it is. Man, it's like 90 degrees out today. Good luck. You guys enjoying summer? Fall is almost here. In Florida, fall doesn't really start till like November. It's been hot. Yo, this Zillow, I think, is one to watch over the next few weeks. I wouldn't buy. It's not a buy for me at this moment till it kind of back and fills. Yeah, I love you too, Jimmy. I appreciate the participation. Hey, Santino, I use the Platinum, but most of my students, they just get the gold and then they add the real-time data.
Just a sec. Sorry, I missed that. Could you say it again?
Hey, Jose, bank stocks they stink to trade. I mean, there's nothing wrong with probably Citibank. You have maybe a risk of 2 points on this. But bank stocks, man, bank stocks are tough.
Nasdaq Bank shares saw a big jump.
What the fuck, Siri?
I won't respond.
Man, every time I do these webinars, my Siri goes crazy. Yeah, bank stocks are just slow. I think in a hot market, when you have so many trenders, it's an opportunity cost of just like this could work, but is it better than the other stuff out there, if that makes sense? Hey, Neil. Neil's at saying, like, you should do an auto trading service. That's just not what I do. When we're day trading, it's fast. You ever watch me trade? It's like a maestro at work. It's just, you got to do your own stuff on this. It's too fast. I don't know. Most of this stuff will have a latency, and there's liquidity issues. You got spread in a lot of stocks. Like stocks like OSTK, for example. I was short this stock. I was short this stock on Friday. It does 17 million shares in volume, but there's a freaking dollar spread on it. So, like, if you had 1,000 shares, there's a dollar spread, and you get the wrong fill. One person could be down 1,000 while the other guy's up 1,000. Arcel, go back to the beginning of the video, when we went through the indexes. But I'd run a 5-day sword on them, on this index list. Man, UAVS, huh? Yeah, I see it. Yeah, Reef, man, I'm fast. I mean, this is what I do, right? This is like my brain versus you're reacting to my brain. It's better to learn. I think anytime you want to follow somebody's alerts, you're going to get smoked out because you don't know what's in their head. Even if they're describing it to you, right, you're clicking buttons too. Like, you don't really have a chance to really internalize a lot of that stuff. It's better to, like, learn a system, learn the methods, have your own ideas. And, you use a chat room, or like I'm on video all day trading in front of my guys. You use it as an addendum, like a voice of the market for ideas, for confirmation of stuff, to ask questions, but like not blindly to buy and sell. Hey, Santino, so I would go with gold and then just do the real-time data. You don't need to use add in like the index data because we use ETFs to track those. Hey, Andrew, I trade in front of my guys and my Bootcamp students every day. Every day. I got screen share up and we trade. Yeah, I got a Discord room, so, I'm just we're in here, and, I'll post a link in the morning. And then, I'm posting all my trades in there too. And then, we got a Discord room, and so, we're in there chatting and stuff. And we do swing trading, so, we do swing trading. So longer-term trades, longer-term trades, and then, of course, we do the day trades. It's like Paul, he's my mentor. He does the longer-term trades. He's been a nice run lately. And then, of course, we do the day trading, which is where I go. So first of all, Brian, ORB pattern is there's not much to it. So ORB pattern, it goes both to the upside and downside. All right, upside and downside. But when you think about like what an ORB pattern is, it's very, very simple. So like usually it'll happen like with a stock that's got some news out or something along that end, or it could just be a stock on your watch list. So like say you got a stock that's got some earnings out. Say you got a stock that's got some earnings out. All right, and now you consolidate at the open, Mr. Pinder. You need minimum three sideways candles, minimum. So it could be 5 or 6, but it's going to happen in the first 30 minutes. All right. So you're going to have 3 sideways candles. You're going to build out like an opening range, essentially, right? Some kind of box near the top of the range. When you take out that opening range, and it's in the first 30 minutes, you're going to take a buy as it breaks, and then just put a stop under the near supports. It could be the VWAP, or it could be the price support, depending on where the pattern is. And then now you're into this thing for, hopefully a nice, thrust. So like it's just a very, very simple 3 candles minimum though. So like, even something like this, right? So like, you push off at the open, and then you start to, build out a range, and then you take it out. Yeah, real-time stock data. Leave the options and index data alone. Just real-time stock data. So hold on here. Let me So if you're going in on your TC2000, I use the platinum, but you can go in with the gold, and then it's got everything minus like a handful of things that like historical condition testing. You probably don't need historical scan results, up to 1,000 alerts. You build market timing indicators from scan. Like these are kind of cool stuff, but that's probably a little bit next level. You can always upgrade once you figure out if you really need that level of technology. And then, just add the real U.S. stock data. And I would leave this, unless you're trading options and stuff like that, you don't need all this stuff. Akeem, how are you, brother? Do you believe in putting in stop losses? Yes, I do. And the reason is most traders lack discipline. If they try to mentally put the stop losses in, they may not stick to them. So like I know a lot of traders that are good traders, but they just don't have that kind of discipline where they say, I'm going to buy something at 100 and I'm going to get out at 99. And they actually stick to it. You know what happens when it hits 99? You freeze. And then you're like, I'm going to give it a second, then it goes to 98. And you're like, I'm going to give it a second, right? It goes to 97. Now all of a sudden, you've really gone above and beyond what you were willing to on the risk side. Some people, though, they can stick to it. Like, they have a level, and they say if it goes under, and they just have the discipline to actually stick with it. But that's tough in the moment. So I think it's just easier to... just use them. Hey, Jacobo! Hey, that's a great name, by the way. Jacobo! How do you locate your day trade setups? What do you mean by that in specific? Let me see if I get that for you. And man, a lot of you guys ask about work, huh? Work is a turd. Work is a turd. It's not that it's like a bad company or anything. It's just there's no trend on this. So what do you really, what can we do with it? What can we do with it? Right. There's probably just better stocks out there. Jason, I have it, but I don't use it. I don't think you need to double up on scanners. I think being good at one is probably going to be more effective than having like a whole host of them. Sweet. Anybody else got anything? Hey, Jacobo, email me if you got any questions in specific. I'll get it for you. Anybody else got any questions? Going once. Going twice. Sold. Adios, muchachos. My friends, it's been real. By the way, we got class starting tomorrow, 6 p.m. We'll run Sundays, Tuesdays, Wednesdays, Thursdays, 8 p.m. Eastern Time. Jeremy, man, I'm looking at the water right now. I spent a lot of time in Spain. That's why I was saying I spent a lot of time in Spain. Malaga. Day trade was strong, fine day trade. Just Jacobo, trading stocks like Exxon are really not going to do you any good. This stock is stuck in a range, and it only moves around about $1 a day. You want to really find stocks that have the ability to move around like $5 to $10 a day, and that's going to give you a lot more range to trade back and forth. Like if you see this thing is not doing anything, right? Where you have other stocks like say OSTK. This moves around on average like $10 a day, and it's trending higher. So when you have something that's trending higher, then you end up with much easier trades. So like if you're longing a stock, Jacobo, if you're longing a stock, then you want to find something that's also trending on the daily and then has a nice intraday pattern, whether it's an ORB, quick pullback buy, VWAP trade. That's called time frame alignment. When you're going long on a stock, you want to make sure, right? If you're trying to go long on a stock, you want to be trading within the trend, and then you want to have something that's also matching it on the daily. Also, Jacobo, you can look at earnings plays like stocks that had maybe announced earnings in the morning, and so they're starting to move around when the market opens. Those will usually have more defined trends too. Hey, Jazz, so Bootcamp class, it's a 60-day course, 4 days a week. All right, it's 4 days a week. 60-day course, 4 days a week. It goes from A to Z on everything, though. We start off at the basics, how to use all this software. What are all the indicators? How do they all work? Like the basics. What is technical analysis? What are charts? What indicators to use? How do they work? Why would we use them? We spend the first week just building out the foundation of the markets and charts. And then we start adding. The second week, we start going into longer term patterns. Longer term patterns, what I mean by longer term patterns is we start looking at swing trade patterns, things that can run for weeks to months. We spend a week doing that. Then we start to narrow it down into more smaller time frames, day trading patterns. Then we go over risk management. Then we go over scanning. We tie it all together. From there, you guys will watch me trade live. I trade in front of everybody every day. We'll put you guys on simulators so that you can start trading too. Start banging the buttons. Once you start banging the buttons, we're going to be able to start much better tracking how good you're understanding this stuff. You need to bang the buttons, start looking, taking the patterns you learn in class and that you watch me trade, and start trying to do some on your own on the simulator. Just hit, right? Trade as much as you can. Once you're comfortable with the simulator, I would say you can make money 4 out of 5 days a week. Your average gain is 1.5 times bigger than your average loss. You're probably ready to try trading live. Once you trade live, in the beginning, just start really small, 50 shares of stuff, get used to things. And then as you feel comfortable and you're still staying in the green, we start adding to it. Okay, let's start trading 100 shares, 200 shares, so on and so forth. Does that make sense? And Jazz, you can retake class as many times you want. I'll have class. When I start class tomorrow, there'll be students in there from 5-6 years ago. I mean, you may not notice, but I have no hair. When I started trading these bootcamp classes, I mean, I was a young man, but I had a full head of hair. I look like fucking Bradley Cooper out there teaching those classes. I've been teaching the classes since 2008. So I have a cute understanding of kind of the ins and outs of how people learn. Yeah, a lot of these new guys, they got braces and pimples, right? You gotta love when you turn on YouTube, you see some kid with braces, he's like, I made $200,000 today, and you're like, yeah, go fuck yourself. Jason, if you're already taking class, just go on the Bulls on Wall Street live chat. Just tell Kevin you want to come back in class. You know, he'll take care of it. You just go to the website. If you're already taking class, you just want to pop back in. He'll make sure you get all the links. Yeah, anything you guys need, you can always go on our website. My buddy Kevin runs the show there on the customer service side. My buddy Omar is on the sales side. Timothy, I've actually never used a hiking stick. No. Only because I've just been doing the way I do for so long. You know, I just haven't tested that out, frankly. Yeah, Dan, you know, this is like a job, right? You know, my goal is make a couple G's a day. And if I have a home run day, great. You know, they'll come. But, like, I can't plan for them. You know, if the opportunity comes and you can whip out a monster day, awesome. But, like, in the end, like, this is a job, man. I'm grinding. I get in the trading day, take a few $100 here, $500 here, start adding them up, and, I'm wheeling and dealing, dipping and diving. John, John's asking if I have a lot of money, want to make trading easier? Well, it definitely gives you an advantage because you have a lot of money, but, frankly, if you're stupid and you have a lot of money, it's still easy to blow it. I know a lot of rich, stupid people, and they lose it. Oh, yeah. This, one of the easiest things, it's hard to make money, but it's very easy to lose it. I don't know why that is, why it's not like a little bit more balanced. Hard to make money, very, very easy to lose it. Good. All right, I gotta go. I wish I had like awesome things to do, but I'm not. I'm headed to the beach, or I'm going out on the boat for a little sunset ride. I'm playing with myself, probably. Just fun. Oh man. All right, I love you guys. I appreciate you guys taking Saturday to hang out with me. You guys all have my email too. Like if you just have some like random trading questions, you want to chat about it, let me know. And if anybody just wants to chat on the phone about trading or classes or anything I do, just hit me up. Rock and roll. Peace, guys. Go have some fun. Even though it's quarantine time, doesn't mean you can't sneak out and, do a little stuff. Peace. Try not to cause too much trouble. Love you guys.